Welcome to the world of digital banking, where convenience and accessibility are just a few taps away. With the advent of new digital technologies, the banking landscape has undergone a revolutionary transformation. UPI, for instance, has made cashless transactions a breeze. However, this digital shift has also brought new risks, particularly regarding consumers' personal data. Poor privacy practices in the banking sector can have a significant impact on customers' financial stability and overall well-being. In today's world, where data breaches and cyber attacks are becoming increasingly common, safeguarding customers' personal information is more crucial than ever. To mitigate these risks and promote privacy-preserving practices in the banking sector, the Data Security Council of India has created a comprehensive sectoral privacy guidebook. In this video, we'll delve into the guidebook's key concepts and provide valuable insights on the significance of building digital trust. But first, let's discuss why building digital trust with customers is crucial for the banking industry. As customers, we interact with various entities throughout our journey with the banking system, and each of these touchpoints involves sharing of personal data. From opening a bank account or applying for a loan to making everyday transactions, our personal information is constantly being shared. This personal information of ours is further circulated between credit bureaus, payment gateways, insurance companies, and wealth management firms. This emphasizes the fact that data plays a crucial role at each and every touchpoint within the banking ecosystem. If our personal information is not handled with care and stored securely, chances are that it may get compromised. This will lead to severe consequences, such as loss of public trust in the banks and eventually slowdown of the economy. The possible solutions to tackle these challenges are through ensuring compliance with existing regulations on data privacy and introducing cross-sectoral laws. RBI has recognized customer privacy as a fundamental right in its Charter of Customer Rights, and a cross-sectoral data privacy law is currently in the making in India. But it's the responsibility of the banks to step up and take a lead in protecting their customers' personal information. Now, let's move on to discuss the 9 sets of principles that offer actionable guidance to strengthen customer privacy and introduce data protection safeguards. The first one is segregating personal data and ensuring visibility over personal data. Altapine Limited is a bank with over 10 years of experience serving customers. They have acquired a large customer base and entered into service agreements with multiple third parties. However, they got into trouble when the banking regulator issued a notice to all the banks to comply with data protection and security direction. Altapine was asked to submit a compliance report on their security measures, but they failed to send it as their data records were not properly segregated and there was no record of data shared with third parties. As a result, they were fined for the lapse in data protection and security practices. Here's what the BSPs should do in such situations. Create data custody policies about how personal data can be stored, maintain visibility over personal data throughout the data lifecycle, and clearly catalog and categorize the data they collect. 2. Communicating effectively with customers. Pranay wanted to buy an air conditioner and decided to look for a loan. In his quest to find the perfect loan, he chooses F11 Bank's loan product. After he selects the product, he is greeted with a lengthy notice that alarms him. The notice has an accept or decline option. Instinctively, he chooses the accept option. Sometime later, Pranav receives a mail from DTEAA asking for his consent to share sensitive financial information. Being unaware of what DTEAA is, he declines their request. Later, Pranav receives a notification from the bank informing him that his loan application is rejected. He soon understands that DTEAA is an account aggregator and they would help transfer information for processing Pranav's loan application. Here's what BSPs can do to prevent this from happening. Provide clear and comprehensible notices to customers. Ensure that customers are aware when they are interacting with third parties. And Frame privacy notices in a way to clearly inform customers about the use of automated means. 3. Obtaining informed consent from customers. Sarah, a visually impaired person, purchased a credit card and gave her consent to the BSP to use her personal data according to the privacy notice. However, the BSP later changed their privacy notice without informing her or seeking her consent. When Sarah wanted to withdraw her consent for the new changes, she found the process to be lengthy and inaccessible due to her visual impairment. Here's what the BSPs should do. Build consent artifacts that are accessible to all the customers. Minimize barriers that customers face while giving or withdrawing consent. Design consent processes that strengthen customers' privacy. 4. Collecting accurate and proportionate personal data. Khyati has been a loyal GloBank customer for 10 years. After marrying Matthew, she wanted to open a joint account. Matthew suggested signing up for CBH Bank, but when they asked for her financial transaction history, Khyati declined their request as she found it irrelevant. CBH Bank kept on insisting to share the financial transaction history, which made Khyati feel that her privacy was not being respected by the BSP. So they opened a joint account in another bank that suited their needs. In such situations, banking service providers should collect personal data that is necessary for fulfilling a purpose, establish mechanisms that can help examine the accuracy and proportionality of personal data, allow customers access to the personal data they are processing. 5. Securing customers' personal data. Bankall is a well-known digital bank marketplace that collects data from its customers, as well as from various other sources on its platform. All this data is stored in a centralized database. Unfortunately, Bankall experienced a data breach that resulted in the leak of highly sensitive customer information, such as KYC details, payment transaction information, and contact details, among other things. During an independent investigation, it was discovered that Bankall had failed to take measures to secure data shared with third parties. Furthermore, the APIs used by Bankall did not have strong security features, which allowed hackers to exploit vulnerabilities and gain access to customer data. Such a situation can be avoided if banking service providers identify the vulnerabilities and risks and address them through security safeguards. Ensure security safeguards while sharing personal data with third parties. Ensure that API providers are using risk-proportionate security safeguards. 6. Using or disclosing personal data with the consent of the customer for clear, specific, and lawful purpose. Samira approached a BSP to purchase a credit card that provides gift vouchers for her preferred e-commerce website. During the onboarding process, the BSP requested Samira to provide personal information such as identification documents, contact details, and employment type. Samira carefully read the terms and conditions and decided to share her details. However, a few days later, Samira started receiving messages from several online pharmacies offering special tie-ups with chemists. Curious about how the online pharmacies acquired her contact details, Samira contacted her banking service provider. It was then revealed that BSP had disclosed Samira's information to the online pharmacies without her consent. To avoid such unauthorized sharing of information, BSPs must disclose personal data to third parties only with the customer's consent and for pursuing a clear, specific, and lawful purpose. Operationalize data portability for customers on their request. Ensure that APIs used for transferring personal data are secure and prevent leakages. 7. Enabling customers to access and rectify their personal data. Rahul applied for a Buy Now Pay Later (BNPL) card on online portal to take advantage of cashback offers. Even though he had no outstanding debt, the app quoted him a high fee and interest rate due to his low credit score. He later discovered that his credit score had dropped because of an incorrect large outstanding payment shown in his credit card transaction history. Despite reaching out to his branch and relationship manager for clarification, he was stalled and even ignored, preventing him from applying for the BNPL card. To avoid this, the banking service providers must establish processes in place for enabling access and rectification, notify third parties about changes in personal data, provide customers with information about important processing activities. 8. Using automated means of processing responsibly. Anuj and Harshita both applied for loans from the same bank with the same credit scores and loan requirements. Surprisingly, the bank rejected a small portion of Harshita's application, while approving Anuj's application in its entirety. When Harshita asked for an explanation, the bank was unable to clarify why her application was denied, while Anuj's application was accepted without any issues. To avoid such conflicts, BSPs must strengthen human oversight over automated means, adopt safeguards against risks posed by automated means of processing, provide customers with control over decisions made through automated means. 9. Demonstrating compliance with best data protection practices. When Garima was using her digital banking app, she noticed some suspicious activity and immediately reported it to her BSP. However, before any action could be taken, she discovered that her account had been hacked and money had been transferred out of it without her authorization. Upon further investigation, it was revealed that the BSP's technology partner had experienced a major data breach. When she tried to file a formal complaint, her banking service provider denied any responsibility for the incident. Instead of being ignorant towards such incidents, BSPs must create organizational capacity for personal data protection, create technical capacity to ensure data protection, demonstrate compliance with data protection laws, and have a robust grievance redressal channel for customers. With that, we have concluded our discussion on the 9 customer-centric principles that provide actionable guidance to strengthen customer privacy and introduce data protection safeguards. We hope this video has successfully addressed any confusion you may have had as a consumer or banking service provider regarding privacy in the banking sector. It should now be easier for you to adopt a privacy-preserving approach. To further assist you in evaluating your privacy implementation, we have curated a self-assessment checklist based on the 9 principles outlined in this video. Download the complete banking guide from our website to use as a reference and enhance privacy implementation in your organization.